Hey everyone, ready for another deep dive?
Yeah.
Today we're digging into a company that was supposed to be the next big thing in AI, but, well, things took a bit of a turn, to say the least.
Yeah, talk about a wild
We're
ride.
talking about Supermicrocomputer, Inc., or SMCI, as you'll probably see it out there in the financial world.
Hmm.
They're a major player in high-performance computing, especially when it comes to the hardware that powers data centers and AI applications. I've got a whole stack of stuff here: stock analysis, breaking news alerts, legal filings, all painting a pretty crazy picture of what's going on with SMCI.
And what's really fascinating is they were having a phenomenal year, at least on the surface. I mean, their revenue basically doubled to almost $15 billion.
Yeah, with profits topping $1 billion. They were set to ride this AI wave all the way to the bank, or so everyone thought.
It seemed like it.
But then, wham, today the stock just craters.
Over 30% down.
Down to $34 a share. I mean, ouch.
Yeah, that's a big hit. Analysts still have a buy rating on the stock, though.
They do.
Their target is over $74 a share.
So clearly, something spooked investors big time. And I think we all know what that something is, right?
Well, it's hard to ignore the elephant in the room, or rather, the missing auditor in the room.
Right. Ernst Young, SMCI's auditor, just up and resigned.
Out of the blue, pretty much.
And they didn't just quietly slip out the back door either.
No, they released a statement citing some serious concerns about SMCI's accounting practices.
Yeah, saying they can no longer rely on representations from management.
Which, to put it mildly, is not a good look.
Okay, so for anyone who's not super familiar with the world of finance, could you break down why this auditor quitting is such a red flag?
Sure, think of auditors as the financial referees of the corporate world. They're the ones who make sure companies are playing by the rules, keeping their books clean, and reporting their numbers accurately, and they're supposed to be completely independent.
Right. Their job is to give investors confidence.
Exactly. Investors rely on those audited financial statements to make informed decisions. So when an auditor resigns like this, and especially when they raise concerns about accounting practices, it sends shockwaves through the market.
It basically says, hey, something might be really wrong here.
Right. It plants that seed of doubt, like, are there irregularities? Was there manipulation of financial data? And that's exactly what's spooking investors.
And it's not like this came out of nowhere. SMCI was already facing some legal trouble before EY decided to bolt.
Oh, yeah, there were definitely whispers of trouble before this whole thing blew up.
Several law firms were already suing SMCI, alleging, you guessed it, securities fraud.
Yep. Claiming that the company misled investors about their financial performance, potentially inflating their success to attract more investment.
Now, obviously, these are just allegations at this point.
Of course.
But when you combine them with the auditor's very public resignation, it starts to paint a pretty alarming picture.
You start to wonder if maybe things weren't as rosy as they seemed. Like everyone was looking at this shiny, successful company, but under the hood, there might have been some serious issues brewing.
Exactly. And to make matters even worse, there's this short seller report from Hindenburg Research floating around out there. We don't have the specifics of what it says, but we know these kinds of reports often point out problems that can further erode investor trust.
Right, they can really add fuel to the fire.
So it seems like investors looked at all of this, the lawsuits, the auditor quitting, the short seller report, and they basically said, nope, we're out.
And I can't really blame them. What seemed like a sure bet is suddenly looking very risky, especially given how important SMCI is to the AI hardware supply chain.
You know, that's what really gets me thinking here.
Oh, yeah.
What does this mean for AI as a whole? I mean, if SMCI, a company that provides so many critical components for data centers and AI development, is having these kinds of problems, could this have ripple effects across the entire industry?
You're asking the million-dollar question. And to be honest, the answer is we don't know for sure yet. But there's definitely reason to be concerned. Because if SMCI's financials are really shaky, it could send shockwaves through the entire AI ecosystem.
Okay, so let's play this out. What's the worst case scenario here? What kind of ripple effects are we talking about?
Well, imagine companies that depend on SMCI's components suddenly facing delays and shortages. Projects get put on hold, costs go up. That's not good for anyone.
And then there are the investors, right? If they see this happening, they might get cold feet about funding AI ventures, especially those connected to SMCI in any way.
Exactly. The flow of capital could dry up, making it harder for promising AI companies to get the resources they need to grow.
So we could see a slowdown in innovation, maybe even a halt to some promising research and development projects.
And in the worst case scenario, This whole thing could cast a shadow over the entire AI industry. Investors might start to question whether AI is really as promising as they thought it was.
Wow, that's a scary thought.
It is, because we're not just talking about one company here. We're talking about a technology that has the potential to revolutionize everything. If SMCI's troubles end up having a chilling effect on the entire sector, that could have a significant impact on all of us.
So this isn't just a business story. It's a story about the future of AI and potentially the future of our world.
You got it. And that's why it's so important to understand what's going on with SMCI and what it could mean for the bigger picture.
And that's exactly what we're here to do, right? To dive deep, explore the complexities, and hopefully make some sense of it all. So stick with us as we unravel this tangled web and try to figure out where this whole SMCI saga might be headed. Because one thing's for sure, this is far from over.
Oh yeah, this story is just getting started.
So we've talked about the potential fallout from SMCI's situation, but let's flip the script for a second. Could there actually be any silver linings? Could there be any positive outcomes that might emerge from this mess?
You know, it's funny you should ask that because amidst all this doom and gloom, there might actually be a few potential upsides. Sometimes, a shakeup is exactly what an industry needs.
Okay, so you're saying this could be a catalyst for positive change? How so?
Well, this whole situation is shining a bright spotlight on transparency and accountability, right?
Yeah, I see what you're saying.
Investors are definitely going to be more cautious moving forward. They're going to demand more scrutiny of company financials and look closer at corporate governance.
So basically, companies are going to have to step up their game if they want to attract investors. No more smoke and mirrors.
Exactly. We could see a wave of reforms in corporate governance with companies adopting stricter accounting practices. And they might even bring in more rigorous auditing standards.
Okay, so that would be a huge win for investors, but it also benefits the industry as a whole.
Right. It builds more trust and confidence.
It does.
Yeah.
And you know what? There's another potential upside here. This crisis could actually spur innovation and competition within the AI hardware space.
You're thinking because SMCI's future is a little uncertain right now?
Yeah, other companies might see this as an opportunity.
To step up and fill the void.
Exactly.
Yeah.
We could see this surge in investment and development of other hardware solutions, maybe even leading to more advanced and efficient AI systems down the line.
Necessity is the mother of invention.
That's what they say. So we've got more transparency, stricter governance, and potentially even a boost in innovation. Those are some pretty significant silver linings.
Yeah, and there's actually one more potential positive outcome. This whole saga is kind of a wake-up call for regulators and policymakers.
It's getting their attention.
They're definitely paying closer attention to the AI sector.
Yeah.
So we could see new regulations and guidelines, to make sure AI is being developed responsibly and ethically.
This could actually change the way we think about AI and its impact on society, too. We might start having more serious conversations about the risks and how to mitigate them.
You're absolutely right. This whole SMCI story is a good reminder that even the coolest, most innovative technologies still come with some big challenges.
So to bring it back to our listener, what's the one thing you want them to remember from all of this?
I think the most important takeaway is don't let the hype blind you. AI is incredible, it has tons of potential, but it's not a guaranteed path to success. So do your research, be skeptical, and demand transparency from the companies you choose to invest in.
That's great advice. And on that note, I think it's time to wrap up this deep dive into the wild world of SMCI and the future of AI. It's been a wild ride, and we appreciate you joining us for the journey.
Thanks for being here. Until next time, stay curious.
Okay, so we've talked about the potential fallout from SMCI's situation, but let's flip the script a bit. Could there actually be some silver linings to all of this?
Oh, that's an interesting way to look at it. Amidst all the doom and gloom, there might actually be a few potential upsides. Think of it like this. Sometimes a shakeup is exactly what an industry needs to address some of its problems and emerge stronger.
So you're saying this could actually be a catalyst for positive change. But how?
Well, for one, this whole situation has really put a spotlight on the importance of transparency and accountability, right? Especially in the AI sector. Investors are going to be much more cautious going forward and are going to demand more scrutiny of company financials, for sure. They're going to be looking at corporate governance a lot closer, too.
So basically, companies are going to have to really prove that they're playing by the rules. No more smoke and mirrors.
Exactly. We could even see a wave of reforms in corporate governance, maybe companies adopting much stricter accounting practices and bringing in more rigorous auditing standards.
Okay, so that would be a huge win for investors, obviously, but it would also benefit the industry as a whole, right?
Right, because it builds more trust and confidence.
Exactly. And you know what? There's another potential upside here. This whole SMCI crisis, this could spur innovation and competition within the AI hardware space.
Yeah, I see what you're saying. With SMCI's future being a bit uncertain now, other companies might see this as an opportunity.
Exactly. We could see a surge in investment and development of new hardware solutions, and maybe even lead to even more advanced and efficient AI systems down the road.
Yeah, necessity is the mother of invention, right? This situation might be the push the industry needs to diversify their supply chain, to not rely so heavily on just one company.
Okay, so more transparency, stricter governance, a potential boost in innovation. These are all pretty significant silver linings, wouldn't you say?
I would. And there's one more positive potential outcome that I think is worth mentioning. This whole saga is a wake-up call for regulators and policymakers. They're definitely paying much closer attention to the AI sector now.
So we could see new regulations and guidelines popping up to promote more responsible development and use of AI. So this whole thing with SMCI, it could really change how we think about AI and its impact on society.
Mm.
We might start having some more serious conversations about the ethical implications, the potential risks, and how we can actually mitigate those risks.
Yeah, you're right on the money there. The SMCI story, it's a reminder that even the most transformative technologies, they still have their own set of challenges, right? And it's really up to all of us, investors, policymakers, even everyday citizens, to make sure that AI is developed and used in a way that benefits everyone.
That is a really powerful message. So if we could bring it all back to our listener here, what is the one thing that you want them to remember from this whole deep dive?
If there's one key takeaway, it's this: be informed, be skeptical, and be engaged. Don't just blindly accept all the hype surrounding AI. Ask questions, do your research, and demand transparency from those companies that you choose to invest in. The future of AI, it really does depend on all of us being informed and engaged.
And that brings us to the end of this deep dive. We've covered a lot of ground today, from that shocking downfall of SMCI to those potential ripple effects across the whole AI industry and even the broader economy. It's been a wild ride, and we really appreciate you joining us on the journey.
Thanks for being here. Until next time, stay curious.